Good morning, everyone. It is September 29th, 2016. Time to kick up another trading day. We left yesterday's market with crude up, ES equities up, and treasuries down. And that's what we find again this morning. The inverse relationship continues. Goldman, who had cut their estimate of crude from $50 for 2017 to $43, said that OPEC's move could add $7 to $10 to the price of oil for 2017. So that would put us in the $50 to $53 range, according to Goldman. And we'll see how that plays out. The details are sketchy, as always. The key is going to be Iran. Iran doesn't have to say a thing until November, and they can enjoy higher prices, $5-10 a barrel without moving a hand. Then come November, they can come back out and do what they always do. No, we're not going to cut our production. We're going to take our production to 4 million barrels per day. And they can do that with all the injection of capital from the United States and the release of restrictions which were working on Iran. And they can gradually get their production up from the 3 million barrels per day, which is where people guess they are today, to 4 million. So that was a big move yesterday. That's an important piece of news. When you look at the energy sector and the S&P 500, it's a major component. It can change the game. This morning we have old news. We have GDP plus 1.3. Deflator plus 2. I think it's 2.5. No, 2.3. Stagflation, which is what we've been talking about. And we know the growth number is overstated and the inflation numbers are understated, so it's actually worse than that. International trade minus 62.3. B, about where it always is. Jobless claims 260, about where that always is. That's the default number now. Corporate profits minus 2.2. That's an important number. It won't get much play. Pending home sales plus 0.5%. That number could come in lower than forecast. And nat gas plus 57B. It is the fall. That's when a great deal. Fall and spring is when the injection goes back into storage. So here we are. The 10 years being supported by the knob spread. The knob spread on yesterday's close was 37.28 this morning. When I looked, it was 37.04. Lost 3/4 of a point. That is a fast moving spread. You can make a lot of money on it if you make it right, time it right. Okay, resistance begins at 12. Last rotate up yesterday afternoon was 15, so 12 to 15 is where resistance is. If the E-mini continues to rally, I imagine this market will sell. So 11 to 15, sell 1. 19 to 23, sell 2. On the buy side, we have support at 4.5 to 7. Better support down at 131. So somewhere between 131 and 131.07 is support, because we're dealing with a B and a stock market that can rally. We'll put a 1 to 5 buy on it. And the Treasury won't come off as quickly as the 30-year. And then 25, 29 for buy 2. Looking at the 30-year, again, the devil in this OPEC deal is in the details. If something comes out where Iran or somebody says, I'm not going to do this, or another country comes out, well, we can't do that, or this isn't fair, or whatever it happens to be, we're going to be subject to news spikes as the various oil ministers of OPEC let their feelings become known. So first resistance area is 28 to the buck. Sell 1, 3 to 7. 15 to 19, sell 2. On the buy side, we've got support 12 to 16. And then down at the buck, basically. So we'll make it 5 to 9. And then 25 to 29 for buy 2. Probably best supports at the buck. And best resistance will be at 169, 169.04 starting out this morning. Gold was pretty quiet last night. It's off a bit. Didn't break. But we went into last night's market saying that gold looked lower to us. And that's what's happened. And we had a 28 to 30 sell last night. And looks like the high was just under 30. So pretty good call. And 19 to 21 is where the buy was. So we're dealing with a B. 20 to 22. That's where the buy was last night. So 20 to 22. Buy 1. Like the 15 to 17 area, major support there. On the sell side, we're at 24, so 28 to 30 is resistance. Sell 1. 34, 36, sell 2. Really not a lot of news to move things today, even if the Treasury sell and the stock market rallies. Could have a quiet day. Could look at a $5 range in gold. But those of you that can trade London time, our end of the day research will put money in the account if the levels we project and predict hold. And it's slower trading, but that's not all bad either. It can really the markets trade technically overnight. You're dealing with trading desk. They know where support and resistance are. The markets are handed off. New York, Chicago, West Coast, Japan. They move around the globe that way. And if there's going to be a change in direction without news, it'll come either on Frankfurt time or London time. The markets start to move now on London time. They don't start on Frankfurt time. And that's just traders getting the jump on London. Okay, looking at gold. Right here, it's a B, but we really just kind of got into this. Looking at the euro, we just really got into this high volume area right here in the 1250. So we wanted to buy the 1250 area. In the 1225, we had 40 to 50 put out yesterday, I believe. Double check that. No, 25 to 35. So we didn't get close to it. 1250 is support. Buy 1. 25. $75 is resistance. Sell 1. 113 even. Sell 2. Crude oil. Again, this market will be subject to news spikes today, so just keep that in mind. There's more opportunity today, potential for opportunity, but the news spike issue is where we are. So 47.50 is resistance. Last night we had a 47 and a quarter, 47.50 sell. The high was 52. That's a pretty good call. We'll leave that. And we'll make 47.75, 48 sell 2. On the buy side, 46.50 to 75. Then 46 even, 46 and a quarter. So 47 plus sell, lean against 46 to get long. So I think 46 got a pretty good chance of holding. If Goldman is right, this rally should take us above 50. And finally, to the E-mini. Nothing's really changed. We have resistance at 75. It starts to build when you go over 65. And we have pretty good support below 40. And that's where we find ourselves today. So, again, the devil will be in the details. OPEC, if Iran comes out and says, yeah, we're cutting production, that would be the best news the market could receive today. So resistance is at 65, 67, and sell 1. 69, 74, sell 2. Last night we were at 63, 65 was the sell. A little bit on the low side, but I had plenty of time to get that trade on at 66. On the buy side right now, I'm guessing 55 to 60 is where the initial band of support is. We've got some volume at 60. We're right there right now, so let's play for a little lower, 55, 57. Put a question mark at 60, and then 50 to 52. So a lot, when you get a major piece of news like that, a lot of that initial move are people getting out of losing positions, and they just, the large institutions, if they see something they don't like, they dump it at the market. And retail accounts won't do that. They don't want to take the loss. But the large institutions are buffered by their other holdings, and they understand that sometimes markets never come back. That decision did not work out as planned, so they're out of it. And that ability to do that is something a retail account should really consider too. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.